Bonds are an essential part of a well-balanced portfolio. And if you're thinking about adding bonds now, you picked a great time. So let's break it down. Bonds are loans made by investors to a borrower, typically a government or a corporate, for a set period of time. Unlike shares, fixed-rate bonds typically pay regular fixed amounts known as coupons to the bondholder, making them a good source of income and stability for your portfolio. Bond prices tend to move in the opposite direction to interest rates. So when interest rates go up, bond prices go down. The prices of old bonds with smaller coupons adjust to this new high-rate world and trade at a little bit of a discount. However, high rates also means those newly created bonds pay a higher coupon rate. While bond prices can go up and down, it's the income from bonds that provides the bulk of returns over the long term, and this tends to be predictable. So why is now a good time to consider bonds? Firstly, interest rates are higher than they've been in years. That means that newly created bonds are paying attractive coupons, which means more income for your portfolio. Secondly, central banks like the US Federal Reserve have begun cutting interest rates, which is a little bit of a positive tailwind for bond prices. But Vanguard expects that interest rates will still remain higher compared with their pre-pandemic levels, so we expect that bond rates will still offer attractive income. Finally, if the economy and markets get a little rocky, bonds can provide steady income and help to cushion your investments from potential share market falls. Vanguard offers a range of bonds ETFs, including the Vanguard Australian Fixed Interest Index ETF, or VAF, which offers exposure to Australian government and corporate bonds. Also, the Vanguard Global Aggregate Bond Indexed Hedged ETF, or VBND, bit of a mouthful there, which gives you access to over 10,000 bonds from around the world. So if you haven't looked at bonds lately, maybe now's a great time to consider adding them to your investment mix. And if you have a financial advisor, chat to them about the role bonds can play in your portfolio.